Welcome to another deep dive. Today, we have this paper titled, From Attention to Profit, Quantitative Trading Strategy Based on Transformer.
Okay.
It's all about using AI to, predict the stock market.
Right. Yeah. This paper really zeroes in on something called a transformer.
Okay.
It's an AI model that's typically used for, language processing. But here, they adapted it and tweaked it to work for stock market data.
So it's like taking ChatGPT and applying it to stocks.
Exactly. Imagine taking those models and then tweaking them to deal with numbers like stock prices and trading volumes instead of just text and words.
Well, and you wouldn't believe this, but this paper actually points out how traditional methods kind of struggled to find those long-term patterns that could really give a good prediction for where the market was headed.
Yeah, and especially they had a hard time forecasting returns over time.
Right.
These older methods.
And that's where this whole transformer thing comes in.
Right.
But honestly, this is where I got a little lost. The paper keeps mentioning replacing a word embedding layer with a linear one.
Oh, yeah, that's actually pretty straightforward.
Really?
Think of it this way. It's like teaching the AI a whole new language.
Okay.
But instead of words, it's the language of numbers.
Numbers.
Yeah, so by swapping out that layer, they essentially allowed the transformer to process numerical data.
So stock data.
Yes, instead of just plain text.
Okay, that makes a lot more sense. But wait, so it's not just crunching numbers, right?
Right.
Because the paper mentioned something called sentiment analysis. How do feelings come into play with all of this?
Thank you for tuning in to Quantopian's Quant Radio, your AI-driven podcast exploring everything related to quantitative finance. If you enjoy this episode, don't forget to like and subscribe to stay updated on future releases. For more quant-focused content, join us at community.quantopian.com. There you can explore a wealth of resources, connect with fellow quants, engage in insightful discussions, and enhance your skills through our extensive range of online courses. Quant Radio is intended to help people develop their knowledge and skills in quant finance. This podcast is not intended to provide investment advice. And now, back to the episode.
You know, that's what makes this so fascinating to me.
Yeah.
Because markets are driven by people and people have feelings.
Right.
So the researchers actually found a way to incorporate investor sentiment into this whole model.
Oh, wow.
They would look at things like the turnover ratio, how frequently stocks are bought and sold.
Oh, I see. So like a high turnover.
Yeah.
Would that signal maybe excitement or optimism or even fear and panic?
Yeah, exactly. You got it.
It's kind of like how the news always talks about investor confidence affecting the markets.
Exactly.
Yeah.
Sentiment adds that nuance to it. It's not just black and white. It really allows the AI to get a more complete picture of what's actually driving behavior in the market.
Wow. So how did they actually test this whole AI thing out? Did they just throw it into the stock market and see what happened?
No, they used a massive data set from the Chinese stock market.
Okay.
It covered over 4,600 stocks from 2010 to 2019.
Wow. That's a lot of data.
Yeah. And to make sure it wasn't just a fluke, they analyzed the model at different trading frequencies.
So what, monthly?
Yeah, monthly, weekly, daily, even to see how it performed across all those different time horizons.
I can't even imagine the amount of computing power it would take to process all that.
It was quite a bit.
So what were the results like after all that? Did it even work?
So get this. The transformer not only worked, but it actually outperformed 100 other factors.
Wow, they really threw the kitchen sink at it.
They did.
And the AI still came out on top. That's incredible. What kind of gains are we even talking about here?
This was significant improvements in annual return.
So it wasn't just getting lucky.
No, it was making calculated investment decisions.
That's really impressive.
It was.
So this is more than just a cool experiment. Then this is something that could actually have implications for real-world investors.
Absolutely. It suggests that AI might actually be getting us closer to that holy grail of consistently beating the market.
Which has always been a challenge.
Always.
Even for the most seasoned traders.
Absolutely. And there's one other thing. The paper found that the model even performed well when those predictions were used weeks or even months later.
So it wasn't just a short-term blip.
Yeah, they call that the half-life concept.
Okay.
So the longer that half-life of a signal is,
Yeah.
the more its predictive power lasts, so it can continue to inform trading decisions for a longer period. It's kind of like radioactive decay.
Okay.
But instead of atoms breaking down, it's the power of a signal fading over time.
I see. So this transformer, it seems like it's tapping into something more substantial.
Yeah.
Than just those fleeting market trends.
Absolutely.
Okay, so this isn't just about day trading or anything like that. This is
Yeah.
about understanding how the market works
Yeah.
at its core and using that to make long-term predictions.
Yeah.
It's like this model's unlocking some deeper understanding of the market
Yeah.
that maybe we haven't been able to grasp until now.
Yeah. One way to put it.
Wow, I'm already feeling like I need to go back and reread this whole paper.
Yeah, it's pretty dense.
So much to unpack here, but before we move on, though, I am curious
Okay.
how this model did at different timescales.
Yeah.
The paper mentions like they analyze monthly, weekly, and daily trading, right?
Right.
Is there one where the transformer like really shines?
That is a great question. And you know what? We're going to dive deeper into that performance at different trading frequencies next.
Okay, so we're going to get into the nitty-gritty of how the transformer handles different trading speeds.
Yeah.
I'm very curious to hear this.
Yeah, we're going to get into it.
What exactly are we going to be unpacking?
We'll take a closer look at how the model stacks up against those other factors and see what those results tell us.
This is already so fascinating. I can't wait to hear more.
So before we get into those trading speeds, we were talking about how this transformer model actually beat out a whole bunch of other quantitative trading factors.
Oh, yeah, like 100 of them, right?
100 to be exact.
It's crazy that this AI went head-to-head with all those strategies and still came out on top.
It really shows you the power of AI to find those hidden patterns and relationships that traditional methods might miss.
Yeah, and I was looking at the chart in the paper that shows the performance of the transformer compared to all those other factors.
Okay.
And it's pretty clear that the transformer's returns just keep going up.
Uh-huh.
Well, a lot of the other factors, they're kind of all over the place.
Yeah, the transformer's consistency is something you definitely have to pay attention to.
Yeah.
It shows a level of robustness that's really interesting.
The paper mentions a few specific factors like 25-week rank and EMAS 20.
Okay.
What can we learn from those about the transformer's capabilities?
Good question. So let's take that 25-week rank, for example.
Okay.
It's basically a momentum indicator.
Oh.
It's looking at how a stock's price is doing right now compared to its price range over the past 25 weeks.
So it's trying to like ride the wave of those stocks that are trending up.
Exactly. So if a stock is ranking high over those 25 weeks, it could mean there's some strong momentum behind it.
That makes sense.
But the fact that the AI did better than this factor suggests it's not just following simple momentum trends. It's going deeper and finding things that might not be so obvious.
Okay, so it's not just following the crowd, it's actually thinking for itself.
Yeah, you could say that.
What about that other one, EMANCI 20?
That stands for exponential moving average over 20 days.
Oh, right. I remember learning about moving averages in like my intro to finance class.
Yeah, it's a way to kind of smooth out all the daily ups and downs and see the bigger picture trend.
Cut through the noise, right?
Exactly. And EMAS C20 specifically gives more weight to recent price data, so it's a little more sensitive to short-term trends.
But again, the AI beat it.
Yeah, it did.
So it's not just blindly following the latest trends either. It's finding something more.
Yeah, it's like it's uncovering insights that those traditional factors are just not seeing.
So this isn't a replacing human traders with robots.
No, not at all.
It's more like giving traders new tools to make better decisions.
Exactly. It's about AI and humans working together.
This leads me to a big question.
Yeah.
If these models keep getting better, what happens to human traders?
That's the million-dollar question, isn't it?
Yeah. Do they adapt and find new ways to work with these algorithms, or do they just become obsolete?
It's something a lot of people are thinking about.
Yeah.
And there's not really a clear answer yet, but it's going to be interesting to see how it all plays out.
Okay, so moving on, something else that really stood out to me was this half-life thing with the trading signals.
Okay.
Can you break that down a little more for us?
Sure. So it's a super important idea in quant trading.
Okay.
Basically, the longer that half-life of a signal is, the longer it stays useful for making decisions.
So like a long half-life means a signal is good for a long time.
Exactly.
Interesting.
It's kind of like with radioactive material, except instead of the atoms decaying, it's the strength of the signal fading over time.
So what's interesting here is this transformer seems to be finding signals that have much longer half-lives.
Yes.
It's suggesting the model's picking up on something much more fundamental about the market.
Something deeper.
Deeper.
Yeah.
So it's not just about those day-to-day ups and downs. It's about understanding the bigger picture.
Exactly. The transformer is looking past all that noise and trying to understand those long-term patterns.
I was just looking at the paper, and they did this whole half-life test where they started the trading strategy a month later each time.
Right.
Did the results hold up even with that delay.
They did. Even when they pushed it back 3 months, the model still got an annual return of over 15%.
Wow. So it really is finding something lasting,
Yeah.
not just reacting to random market fluctuations.
Which leads to another question.
Okay.
What exactly is the model picking up on that those other factors are missing?
That's what I was thinking too.
Right.
It's like we can see the good results, but we don't really know the why behind them.
That's the thing about some of these AI models.
Yeah.
They can be kind of a black box. We know what we put in and we see what comes out.
Yeah.
But the process in between is a little bit mysterious.
So we need to figure out how to open that black box.
Yeah, I think as AI gets more integrated into finance, figuring out that why will be really important.
Okay, so even though we don't fully understand how it works, the results themselves are still pretty amazing.
I think so.
So you mentioned earlier that the paper tested the model at different timescales, like monthly, weekly, and daily.
Right?
Why did they do that, and did it change the results?
We saw that the model seems to really like that long-term perspective.
Right, but then the daily trading was surprisingly consistent, even though it wasn't as profitable overall.
Yeah, that low turnover rate with the daily strategy is what really caught my eye.
Yeah, why is that so important?
Well, it tells us the model was able to avoid all that excessive trading,
Okay.
which can actually end up costing you a lot in fees and stuff.
Right, transaction costs eat into your profits.
Exactly. It's like the AI was learning to be patient and picky, only making trades when it was really sure.
So not just what to trade, but when to trade.
Yeah, exactly. Both are super important for success.
This whole thing about the different frequencies makes me wonder if there's like a sweet spot for this model,
Oh, that's a great thought.
like a time scale where it really does its best work.
Yeah, that's definitely something to explore more.
Right.
The paper only looked at monthly, weekly, and daily,
Uh-huh.
but there's a whole world in between.
Yeah, what about like every few days or bi-weekly?
Exactly. Maybe there's a rhythm that just works perfectly with how this transformer sees the market.
It's like finding the right tempo for a song, right?
Oh, I like that.
Not too slow, not too fast, just right?
Yeah, too slow and you lose the energy, but too fast and it's just a blur.
Exactly. So this whole question of the best trading frequency, I think there's a lot more to discover there.
For sure, this research is just the tip of the iceberg.
It really feels like we're seeing a whole new era of quantitative trading,
Yeah.
all thanks to AI.
It's a new world where human intuition and AI insights can work together.
That's exciting.
It is, but we have to be thoughtful about it,
Yeah.
and recognize both the good and the bad.
Yeah, this technology could be a game changer.
Definitely.
But we need to think about the bigger picture, too.
We have to make sure we're using these tools in a way that benefits everyone, not just a select few.
Well said.
Wow.
I feel like we just scratched the surface here, but this has been a fascinating deep dive.
Me too.
I'm already thinking about all the other research out there on AI in finance.
There's so much to explore. It's really amazing.
It is, and it's changing so fast.
Yeah,
Who knows what the future holds?
I can't wait to see.
Okay, so before we wrap up, any final thoughts for our listeners?
Just a reminder that even though this research is super promising,
Uh-huh.
no trading strategy is a guaranteed win.
Right.
Investing always has risks, so be careful and do your research.
Couldn't agree more. Invest wisely, folks, and never more than you can afford to lose.
That's the key.
Well, thanks for taking us on this journey. It's been really enlightening.
Happy to do it.
And to all our listeners out there, thanks for joining us on this deep dive. We'll be back soon with more explorations into the world of AI and beyond. Until then, stay curious.